Welcome to Living in a Double World. My name is Ana Maria Quevedo.
And I'm Feliz Quevedo. Once you have everything needed to request a home loan, you are ready to buy a house.
Make sure you understand what type of loan you're getting, what are the terms, what's the interest rate you're paying, and all those goodies.
So we have different kinds of interest rates. An interest rate, basically we have a fixed rate. That's the best kind of rate to have. It's fixed for 30 years. We used to have 40-year loans, but they got rid of the 40-year loans because basically banks did not want to loan the money for that long. The second kind of loan is, let's say I'm in the military and I'm only here for 3 years, and I know I'm here for 3 years, and I know that in 3 years I'm going to be moving to Germany. So I can do something that's called an adjustable rate loan just for 3 years, which gives me that in 3 years I have to sell the house or refinance. But let's say I'm in the military and after 3 years I decide to make San Antonio my home, I can refinance that house from an adjustable rate. Sometimes the adjustable rates are lower, like 3%. So that might be more attractive because I know that I'm only here for 3 years versus getting a fixed rate loan for 4.5, okay? So that's a little bit of a savings. But those are a little bit risky loan, and the loan officer should explain to them that, yes, Mr. Smith, you're here for 3 years, but what if you love San Antonio and you fall in love? You will then spend money in refinancing, which adds money to your loan, and then you have to either sell the house, okay, or refinance, okay? The other kind of loan is that we have people want to just buy land. So let's say they want to, a lot of people come in from San Antonio and they want to buy a home in Canyon Lake. Well, they're in California, but they know that in 5 years they're going to come to San Antonio. So they buy a lot in Canyon Lake. It's a lot loan. And a lot loan basically is requiring to put 5 or 10 or 15% down. But in 5 years, that lot loan, the bank will say, we need for you to build on that house. It's a balloon payment. The whole loan will come due. So the balloon payment means that, let's say you got the lot loan for $100,000. Just the land alone is $100,000, and you have put $50,000. Now the balance $50 is coming up due. Now, if you cannot come up with the 50, then you need to refinance. So balloon payment means that you got the loan for 5 years. It's amortized over 30 years, so your payment is slower. It's like you have a 30-year loan, but in 5 years, you have to do something with this loan, and that's called a balloon payment because the whole note comes due, okay? Fixed rate is 30-year, nothing that you have to do. Adjustable, you have a 2-year fixed, or 3-year fixed, or 5. You have a 3, 5, 7, or 10-year adjustable rate. But then after that, every 6 months it could change, okay? The balloon means the whole note comes undue. So those are the kinds of types. We basically had something called a interest-only loan, and a lot of those loans got a lot of people in trouble. So interest-only loans are also, for example, my niece, moved to Albuquerque, but the houses in Albuquerque are extremely expensive, $300,000. Well, if you've got a starter's job and you cannot pay a $300,000 home, your payment would be about $3,000, 1% of the payment, right? So she got an interest-only loan. So she borrowed $300,000 5 years ago. 5 years now, guess what she owes the bank? $300,000. Nothing has gone into her principal. Her payment is $900. The $900 is just the interest going to the bank. She borrowed this much money from the bank. It's just interest only. The bank says, oh, you want to sell the house? Guess what you owe me? $300,000. So an interest-only loan means that nothing ever went to principal unless she paid extra to principal. The note is still at $300,000. Okay, so that's called an interest-only loan. So there's really basically 4 kinds of loans. We talked about the fixed, the adjustable, the balloon. The balloons are usually on the lot loans. Oh, there's one more loan called the interim construction loan. So you buy the lot and now you want to build a house. So during the time that you're building the house, the Fannie Mae doesn't give you a 30-year fix. It basically says you need to go to another bank and do an interim construction loan. And what that means is, let's say my house is $100,000. I'm going to use that for talking purposes. And right now the foundation is laid out, $10,000. So the bank comes and views that $10,000 is done. Okay, they give $10,000 to the builder. The next thing, the house is framed. Another $10,000 is given to the builder. But the bank, as an inspector, come to check that the house is being built as per specs and it's being built. Then the next thing is another $10,000 for the windows and for the, the sheetrock. Okay, and another. So every month or every 2 months, when the house is being constructed, money is released to the builder while he's building the house, called an interim construction loan. After after the home is complete, the home is appraised again and made sure the house is worth what they said it would be. And then somebody like myself, which is a Fannie Mae lender, would come and do a permanent 30-year fixed loan. So we pay off the interim loan and we do a permanent fixed loan. And that's for somebody, because banks don't know if the builder's going to run off, if the banks are going to complete the home, if they're going to be. So we, Fannie Mae, we use that house as collateral. So if Mr. Smith runs away and takes a boat to Bahamas and never comes back, the bank now has this house they use as collateral that they can sell. It'll foreclose, but the bank will get their money. So a bank wants a collateral, and they hate doing lot loans because it's just land. There's no collateral on it, there's no house on it. Basically, the gentleman who buys the house, Mr. Smith, says, I own this house from the floor going all the way up to the sky. He owns all the space. And that's pretty much real estate, real property. That's what they call it, real property. So
we wish you blessings and guidance to all.
Till next time.